out and expanding electricity access across the country. Managing Director of the Rural Electrification Agency, Abba Aliyu, disclosed this on Thursday at the Oriental News 2026 conference held in Ikeja, Lagos. Represented by the Executive Director of Corporate Services at REA, Boyega Ayode, Aliyu said the agency was moving away from encouraging single isolated mini-grid projects to supporting developers capable of building utility-scale renewable energy networks that could serve entire communities independently of the national grid. According to him, the proposed renewable energy service companies, known as RESCOs, will offer consumers an alternative to conventional electricity distribution companies by providing round-the-clock clean energy through interconnected mini-grids powered by solar energy and battery storage. He explained that rather than allowing developers to build a single mini-grid in a community, the agency was encouraging firms to establish dozens of interconnected mini-grids capable of serving entire localities. The REA was urged that Nigeria could no longer depend solely on distribution companies, noting that many communities remained without electricity because serving them was not commercially attractive to the operators. Aliyu said renewable energy mini-grids offered a more reliable solution because they could provide uninterrupted electricity if operators maintained the battery systems properly. He disclosed that agreements were already being reached between mini-grid developers and distribution companies in areas where the latter had little or no presence. He cited the performance of Band A customers as evidence that improved service could be achieved under cost-reflective tariffs. The naira is coming under renewed pressure against the United States dollar as fuel importers increase foreign exchange purchases to build inventories. Reuters reported on Thursday that the Nigerian currency, alongside those of Ghana and Uganda, is projected to weaken against the dollar over the next week, while Kenya's shilling and Zambian's kwacha are expected to remain broadly stable. The report attributed the anticipated depreciation of the naira to increased demand for foreign exchange by fuel importers who have been granted licenses by the Nigerian Midstream and Downstream Petroleum Regulatory Authority to import refined petroleum products. The naira was quoted at 1,368 naira per dollar on the official foreign exchange market on Thursday, compared with 1,383 naira per dollar a week earlier. It exchanged at about 1,420 naira per dollar in the parallel markets. A trader told Reuters that the local currency was likely to face downside risks as importers sought more dollars to finance fuel purchases. The Reuters projection comes amid growing concerns by downstream operators that continued fuel imports are increasing demand for foreign exchange despite rising domestic refining capacity. The Dangote Petroleum Refinery has repeatedly accused the NMDPRA of sabotage by importing fuel when its tanks were full. An official of the refinery complained that the government was allegedly releasing dollars for fuel importation when 45% of the facility's output could satisfy the country's fuel needs. The Manufacturers Association of Nigeria has renewed its call for coordinated structural reforms to address inflation, improve productivity, and strengthen the competitiveness of the country's manufacturing sector as it looked ahead to the second half of 2026 following disruptions caused by the Middle East conflict. The association made the call against the backdrop of the latest National Bureau of Statistics data, which showed that Nigeria's headline inflation eased marginally to 15.91% in June 2026 from 15.93% in May. However, food inflation accelerated on a month-on-month basis, driven by higher prices of fresh pepper, tomatoes, crayfish, beef, garri, yams, and other staple foods. The Punch earlier reported that members of the organized private sector welcomed the slight decline in the inflation rate for June 2026, but warned that inflation remained in double digits and prices were still too high for businesses and consumers. In his remarks for the April-June edition of MAN News obtained by this publication, the Director General of MAN, Segun Ajayi Kadir, observed that the renewed increase in inflation during the quarter highlighted the fragility of Nigeria's economic recovery as higher food prices, energy costs, transportation expenses, and exchange rate pressures continue to rise production costs and weaken consumers' purchasing power. Meanwhile, Ajayi Kadir noted that the association remained committed to pursuing policies that would enhance industrial competitiveness despite economic headwinds in the first half of the year. He noted that the second quarter witnessed increased business and government activities after a slow start to the year, but was affected by insecurity across parts of the country and the impacts of the ongoing conflict between the United States and Iran in the Middle East. Dangote Petroleum Refinery and Petrochemicals has secured about $2.5 billion in fresh capital through a private equity placement in what the company described as Africa's largest publicly disclosed primary equity private placement. The company disclosed this in a statement on Thursday, saying the fundraising marked a significant milestone in its history and reflected strong investor confidence in its long-term growth strategy and operational excellence. According to the statement, the transaction is the refinery's first equity funding round involving external investors beyond the company's legacy shareholder base, underscoring its growing appeal as a world-class energy and industrial enterprise. It stated that the proceeds will be deployed to support the continued expansion of the refinery and petrochemical complex, strengthen the company's capital structure, and enhance financial flexibility to pursue future growth opportunities. The statement noted that the offering attracted broad participation from international and African institutional investors, sovereign-related investment vehicles, development finance institutions, strategic partners, and individual investors. Among the notable participants were the Africa Finance Corporation and India Infra Buildco, an investment vehicle facilitated by the African Export-Import Bank, which the company said reflected deep and diversified confidence in the refinery's long-term prospects. Commenting on the successful transaction, President and Chief Executive of Dangote Industries Limited and Chairman of Dangote Petroleum Refinery and Petrochemicals, Aliko Dangote, described the placement as a strategic milestone in the company's evolution. The United States has imposed a 12.5% tariff on imports from Nigeria as part of a new trade measure targeting countries it says have failed to prohibit the importation of goods produced with forced labor. The tariff affects imports from 60 economies that Washington says have not imposed and effectively enforced a prohibition on the importation of goods produced with forced labor. The measure was announced in a statement posted on the website of the Office of the United States Trade Representative on Thursday. Nigeria is among the countries subject to the 12.5% tariff, while India, Indonesia, Malaysia, Mexico, and the United Kingdom will face a lower 10% rate after adopting or committing to implement bans on imports linked to forced labor. The move follows investigations launched by the USTR in May 2026 into 60 of the United States' largest trading partners under Section 301 of the Trade Act. According to the agency, it received more than 1,600 written submissions, held public hearings involving over 100 witnesses, and consulted more than 45 governments before announcing the tariffs. The USTR said countries that have already implemented or committed to the implementing forced labor import prohibitions would attract a 10% tariff. Specifically on Nigeria, a Federal Register notice obtained from the USTR on Friday stated that the country will be subjected to a 12.5% tariff on its products, except for items listed under specified exemptions. And that is it on business news. Stay tuned for News Track at 2 p.m. Good morning.
You must marry me.